Hello, everyone. How's everyone doing today? Happy Tuesday. Sterling with lots of news in here. Thank you, Sterling. Don't have time to go through all of that. Well, yay, the Cybertruck coming on Thursday. What are we going to do without that? What else we have? And we have GM cutting spending on self-driving cruise unit. Thank you. Good morning, Patrick. Good morning, Richard. Hey, Patrick, what's the temperature up by you? It was cold here this morning. It was 14 degrees. What is it by you? Anissa, good morning. Tony, hello. Good morning. Good morning. Royal Palms. Second good morning for Tony. Hey, Jacob. Please read this one. National debt now stands at 33.832 trillion. For reference sakes, 1 trillion seconds is 32,000 years. Well, there we go. So, if we paid off a dollar every second, it would take us 32,000 years times 33,832. Okay, we've got it. We're screwed. We're screwed. Thank you, Sterling. We're screwed. Heinrich, good morning. So, after that jolly old good news from Sterling going into the holiday season, the gift giving season, where people are leveraging credit to shop. So, we'll see how that turns out. Consumer savings tapped out. Did you put in something about consumer savings in here? Oh, here we go. 80% of American households are in a worse financial position now than they were before the COVID pandemic hit. Americans outside the wealthiest 20% of the country have run out of extra savings and now have less cash on hand than they did when the pandemic began. All right, so there you have it. So buy more crap on credit. That's what you got to do. Keep the economy pumping. I'm being sarcastic. So, speaking of keeping the economy pumping, let's just see here. The Red Book numbers came out. Big jump in Red Book this week, up to 6.3%. Case-Shiller home prices month over month coming in slightly lower but still climbing. And year over year, climbing. Forecast 2.5 coming in at 3.9. So, house prices still climbing, at least from the Case-Shiller point of view. That's where we sit now. Consumer confidence coming out at 9 a.m. Central. Goolsby speaking at 9 Central. Richmond Fed, minor regional index, but both manufacturing and services. After the Dallas index yesterday was bad. I think I remember minus 19. It was not good. We got Waller speaking. We got Dallas Fed Services Index. So let's see how that is. That's still forecast to be in sharp contraction. We got Bowman speaking, and we got Barr speaking twice. So lots of Fed speak today. I don't know what they'd say to move the markets. The markets are pretty much ignoring everything with the Fed. We have Micron getting hit this morning. Chips pulling back, but not any. Besides Micron, the mega caps are mixed. Oops. Tesla pretty flat. Boeing up 169 basis points. And oil trying to get a bounce on here. So we'll take a look at oil futures. If we look at the groups, let me just do a quick refresh of this again. Consumer cyclical and consumer defensive and utilities are positive, and everything else is pretty much negative. Com services leading it lower, but not anything to shock the market at the open. Fed watch, we actually have the first cut bumped out now till June. Nothing with any hikes besides we're in pause mode. And fear and greed index still in greed. All right. It was 5 degrees, now 8. Oh, don't you love the winter, Patrick? How did you get 2 good mornings? I don't know. It showed up twice in the feed. Modern monetary theory. I think it's madness monetary theory. This is insane. The modern monetary theory. Garbage. Garbage, I tell you. After close today, CrowdStrike, Workday, Intuit, Hewlett Packard Enterprise, NetApp. Nothing really is going to shake up the markets, but if you have any of those stocks, pay attention to that. Tomorrow morning, Foot Locker, Dollar Tree, Petco, Hormel's. The ones I'm going to be looking at are Dollar Tree and Hormel. So that's where that stands. All right, I actually have it on the 2-year yield, micro yield right now, getting sort of crushed this morning. Big gap down there, and you see the 10-2s, a little gap up here. So we'll have to see how that plays out if we're starting to get a bottoming formation put in. Remember, we had the potential reversal that never triggered. Now we have a gap up, but going to be keeping an eye on that. So far, we have a curved rollover. Not even reconnecting with the 8 yet. If we do break down in the morning, I'm really watching for about 45.38 area, and then 45.24 are the next key ones. Full disaster mode would take, I don't know what would happen, but full disaster mode would be 4,500. To the upside, a very, very strong resistance at 45.70. Keep an eye at 45.70 area. Any upside targets for shorter term trades would look at 45.70, and the minor level would be about 45.65 to at least raise a stop. Personally, from the way price action looks like, and then 45.70, I would be definitely looking to at least take partial profits. Next level up is 45.80.50, which was the high last Wednesday before Thanksgiving. And on any breakout move, and not just for today, you have the minor area coming in about 45.92, 45.93, and major is 46.0125, which is a gap still left behind. Back from August. Will we get to the August levels again with the market insanity? We still are getting now daily cycles getting back to the bottom out of overbought condition. So this may simply be just a sideways correction before another push higher. So keep that in mind. As I said, for longer term stuff, it's definitely in trailing mode from my perspective. It's definitely in trailing mode because this has to get significant technical damage before we start getting into any key selling mode, at least in the short term. So NASDAQ, a little more volatility, but this would still count as a sideways correction in my book. Coming back, we've got 8 now running up to the price level. If we did break below this 15,932 area, minor would be 15,900, and then significant would be about 15,871. If we went into disaster mode, 15,800, 15,811. To the downside, you see here also cycles getting to the bottom on the NASDAQ, but weekly still at the top. So I'm really thinking we could make another push higher, keep stuff at top, and then, so we could get another few days out of this at least to the upside, or at least sideways and getting it to the up with possible some pushes up. So we'll be watching for any bullish setups. You can keep an eye on this level going into the open. You can keep an eye on this and the NASDAQ. But it has to sustain at least a 1-hour close above 1610.75, so roughly 1611. It's got to close above there. If it breaks above there and won't fall through at the close, it'd be nothing I would hold on to because we could be in a choppy mode. 16,041, 16,056, 16,071, and that would be the move that started it. So those are the key things if we get something to the upside in the NASDAQ. Why does this keep shifting off of there? Don't know. All right. The Dow is just in a choppy sideways mess right here. The support level I'm really watching is roughly around 35,200 to 35,220. Disaster mode gets down to about 35K. To the upside, on any breakout now, the next key area is 35,550, 35,500 to 35,550. Dow doesn't have the stronger cycle set up, so I'd be looking more at the S&P and NASDAQ. On the Russell clearly caught between support and resistance. Breakdown mode for me is 1787. Breakout mode is 1813 still. Nothing has changed. A little front run area, I'll pay attention to yesterday's high and low. So the high and low from Monday. The VIX, still in no fear. We're in complete no fear zone. Got cycles rising up, but this hasn't made much progress. So it'll be interesting to see. We got long-term cycles at the bottom, so we'll see what this does if we get another quick rollover and then getting the VIX down with a low cycle again, and then we could, again, set up for something. Sorry, I said again multiple times. We don't need to look at the VIX daily. I mean, look with where this opened or yesterday. This was just insanely low. That was like the lowest opening it's been since it's been released. The DAX coming back to that nice little daily rotation zone. Going to be keeping an eye on roughly 16,000. We break above 16,000. If we break above 16,000, going to be watching on the DAX 16,047, 16,050, and then we have some major key resistance 16,072. On any continued pullback, 15.9 would be my key level. The notes. Here we go. As I said, this was weak against the rotation zone and now invalid because of the holiday. There's just not a lot of good setups right now in the notes. Nothing good. If we break above 109.08, 109.20 to 109.22, we break below 108.04. And then I'll watch for the pullback to the bottom of this channel it's stuck in. But there aren't a lot of great setups in here. The double, which never triggered on the yield, the micro yield, turned into a triple. So no, not any fantastic setups there. I will be watching to see if this does get on anything happen in the markets. If we do get a close above about 4.53, that would take us back above the 50 in the rotation zone. The 50 EMA and the rotation zone. Other than that, it did close yesterday below the 62.5. So if we're going by the probabilities from at least from the lows in September here, we could see some more continuing downside price action, which would be dropping in the yields. Dollar index, still there's a little mini potential double. Still a mini potential double right here. So we'll be watching for that, but the price action is still, it could be invalidated today on a further drop. The key level I'm watching is 102.04. Crude, still not invalidated. Yesterday's price action did not invalidate the potential double, but I'm not really excited yet to see if that triggers because there's a lot of overhead resistance. Again, crude, I'm watching yesterday's lows. Highs, lows from yesterday. This setup's really stinks so far. Good morning, Connor. Good morning, PMG. Good morning, Legion Reaver. The Mike app has setups in both directions. It either has a monthly cup and handle or monthly inverse head and shoulders and weekly potential double top. Looks like long above 45, short below 35. We'll take a look at that in a second. Let's look at stuff. Gold breaking out. Still has a potential double. Remember, potential doubles may never trigger. It's just something for a key thing to watch for, especially for longer term stops. The next major target, since remember we closed above the 62.5 back in October, little pullback. We're still favoring hitting that 87.5, which is 2052 area. Let's just see the yen. Nothing key yet. I just wanted to check something here. Needs a little more pullback to see if we get another double bottom after we have the double top bouncing off the second target. The euro still has a potential double top that may never trigger. I'm watching today on a close above 109.65. That's the key closing level there. Not much to do on the pound. Still paying attention to this 127 area, 127.27 to be exact. The spiders still, there's a gap left behind to last Tuesday. So a week ago, 453.27 is the key support. We're trading 453.75. We drop below that. We're looking at about 451.80 to 452, and then 450.40. To the upside, little resistance about 455.50 and then 456.50. So that's where that sits, and we have to update. Since we now have a better pausing area, we can update. If it were to break above last Wednesday's highs, you now see the cluster at the highs back from July, which is 459.25 area. The Qs. The Qs, we have support coming in still right around 388.50. We're trading, or we are technically below that, so that's resistance right now. The next key area of support is 387.25. 387.25. And then the major support is coming in all the way back at 385. If you're looking for a minor support behind 387.25, it's about mid 386s. Key resistance is 390.73 that the Qs have to get above before I can look for a bullish break higher. Then we're looking about 392.95 to 393, then 393.55. Yeah, there is nothing going on yet. And let me jump back to crude. There is nothing just yet. There is nothing. I mean, there is a potential percent B buy, but remember, and I'll go through this when I go over more of the percent B later in December, but it's really limited potentially upside. You got to be really tight with stops. That's by the reward to risk. It'd have to be done intraday, and then, even see if it carries through to the close, because that's about it. So I'd be watching yesterday's high, but that's not a strong percent B buy setup because of where the rotation zone is. Where else do we sit? Tesla still caught. Breakdown mode 231. Breakout mode 245. Still sitting there sideways. Not much to talk about there. Still the potential double top with mini double top with the close below 226.54. NVIDIA. Cycles at the bottom, so I'm going to be watching for a rotation back up right now. That's about it, and see if it puts in a more significant topping pattern. Some other key things. Apple, after nearly hitting the second, pulling back to the rotation zone with cycles getting to the bottom. So we start seeing another push up in Apple. And NVIDIA, this could definitely propel us for the next little minor move to get us to that top cycle area. So keep that in mind also. When you look at the big five key ones, could be forming a little mini, very sloppy head and shoulders, but still marching along. All right, what did you want me to look at? Sterling, APP, the good old Apple. Is that what you wanted me to look at? App? Monthly cup and handle. Okay, or what else do we have? Monthly inverse head and shoulders. That's really weak on the monthly basis. And the daily double top. Okay, I see exactly what you're looking at now. Yeah, you're... Wow. Yeah, well, that's a really weak head, and it's not a properly formed head and shoulders there. So, I mean, I'd just be using the key target points. Like if it broke above this 44 area, I'd just be using about 54.50 as a first target, as a very key target. I would not be trying to turn this into a long-term trade. And then about 56.40. Above 56.40, you get into a... These are the exact targets I would utilize right around here, these lines on the upside. Those would be any target if it did break above that 44 level. And it is basing there. And we do have on the weekly also the little mini double top. So that would be interesting also. So that's where it sits from my perspective. Not that that matters. All right. Is there anything else going on? I'm just not finding it. This happens every so often where it's like the market's waiting for something. Even if we push higher, I'm still in like the market's not fully. It's already had its rip your face off rally for November. We're sort of pausing going into the end of the month. Maybe we get the one more push higher. But it's seeming to struggle and running out of energy, and it's like really not trading entirely well. Does that mean there's any setup to the short side? Not yet. But it's just not trading very well from my perspective. So keep an eye on that. You know, keep an eye, especially watch the tick. Really watch the tick. We're not getting a ton of extreme ticks. It's very, you see yesterday was very controlled. You got a couple negative push downs, but nothing below minus 1,000, and they snap back really quick. To the upside, there has not been any really sustained buying pressure. There was some last Wednesday before Thanksgiving, but other than that, there's not been anything that's really sustained. So I'd really, before I get super bearish or super bullish, I want to see some really pressing ticks, like in holding, especially ticks holding above 400 to 600 on the upside, or really starting to push down and sustaining below minus 600 to minus 800 on the downside. All right, that's where we sit with that. So I shall talk to everyone later. Have a wonderful trading day. Bye for now.